manufacturing data from China released over the weekend lifted market sentiments as the week started and sent Asian equities generally higher. The official manufacturing PMI improved to a 7-month high of 50.6 in November. While the figure was slightly below expectation of 50.8, it does suggest that recovery is gathering pace mildly. Separately, the HSBC manufacturing PMI was revised up to 50.5, confirming the highest reading in more than a year. European majors are generally higher against the dollar on risk appetite. But selling in the Japanese yen was somewhat muted. Also, the Australian dollar has failed to participate in today's risk rally so far on expectation of a Reserve Bank of Australia 8 cut tomorrow. We retain our forecast that the Reserve Bank of Australia will lower the cash rate by 25 base points to 3% in December. The key reason for the rate cut will be to stimulate non-mining domestic economic growth in light of the potential slowdown of mining investment. While the macroeconomic environment, for example the stronger than expected employment growth and upbeat data from China, since the last meeting might not warrant an overwhelming support for a rate cut, it was offset by the downgrade of more forward-looking mining investment intentions and a sharp decline in business conditions. Moreover, it would be more appropriate for the bank to cut the rate in December rather than pausing for 3 more months until the next meeting in March. In Europe, it's reported that Greece will unveil the details of the bond buyback package today, ahead of another EU finance minister meeting. Under the plan, Greece will target to lower its overall debt by a net €20 billion, through spending €10 billion from the European Financial Stability Facility to buy back bonds with €30 billion face value from the markets. It's believed that the price offered to bondholders would vary depending on the bonds, instead of being at a uniform rate. The program should be completed before December 13 for Greece to receive the next tranche of bailout funds. In Germany, Chancellor Merkel was asked if a haircut of Greek debt is a way out of the situation of unsustainable debt, austerity and recession. She responded by saying that, when Greece one day again manages with its revenue, without taking on new debt, then we have to look anew at the situation and re-evaluate. But, that won't be before 2014 to 2015 if all goes as planned. The comments were taken as a sign that Merkel is finally softening her stance on debt forgiveness, and analysts even said that's the end of denial, as many expected that there would be an eventual debt write-down. Latest CFTC data showed that euro net shorts dropped sharply to 66,700 contracts on November 27, compared to the prior week's 91,400. And the figure is relatively closer to September's low of 50,300. Yen net shorts jumped to 2012 high of 79,500. Sterling positions maintained net longs at 10,300 and it was nearly flat a week ago. Australian dollar net longs jumped further to 76,200, also closer to 2012 high of 89,600 made in September than the 33,400 recent low in October. Canadian dollar net longs, however, were relatively unchanged at 62,400. On the data front, New Zealand terms of trade dropped more than expected by 3.2% quarter-on-quarter in Q3. Australian retail sales were flat month-on-month in October compared to expectations of a 0.4% rise. Japan's capital spending rose 2.2% in Q3 compared to consensus of 4.4%. Swiss